Good morning. I'm Dominic Sposeto. I'm the association's lobbyist in St. Paul, and I'm here today to give you a brief update regarding the 2016 legislative session. This session was the short session, the second part of the biennial legislative session, and it was basically 11 weeks long. Not a lot of time to complete the work presented to the legislature. And in fact, there was some considerable carryover from the previous legislation when they failed to enact a major transportation bill and a tax bill. So those were carryover items, and include that with a bonding bill for state construction projects, and you have the triumvirate of legislation that was to be considered this year. But that said, many of these issues and many of the issues that we were following were not enacted, and in fact I'm going to tell you right now about the laws that were not passed, and save room at the end for a couple that might be of interest that are new laws. The first issue, and probably our biggest disappointment of the session, was failure to enact a tax bill which contained a significant provision that we have been working on with the insurance industry for a couple of years. This has to do with the Department of Revenue rule relating to the location of an individual's financial advisor or insurance agent for purposes of determining residency for Minnesota income taxes. The Department of Revenue has aggressively gone after snowbirds who try to avoid paying income taxes in Minnesota. And in order to do so, they have to be domiciled in a different state for 183 days. Sometimes that's not the case, depending on transportation issues and where they're traveling to and whether they stay in one state or not. But in any event, that issue has been used by your competitors in other states to try and convince snowbirds and your clients to move their business to their agency. So we've been working for 2 years to enact legislation that would say, direct the department, I should say, to no longer consider the location of a person's financial advisor or insurance agent in considering the state of domicile for income tax purposes. We were able to get that enacted into the tax bill last year, but unfortunately that was not passed. This year we were able to again put it into the Omnibus 2016 tax bill, which unfortunately the governor vetoed yesterday. That said, there's still an opportunity for a special session, and this legislation may resurface in the near future, and we'll hope it'll be part of the special session agenda if there is one. Another issue that didn't pass was one that got a great deal of attention, which is the Fair Auto Insurance Act that was brought forth by Commissioner Michael Rothman. This proposal was fairly sweeping and would basically overturn the file and use system for auto insurance that we have in the state and replace it with a prior approval system. It would limit underwriting to basically 3 factors, and those factors would be driving records, years of driving experience, and the miles driven. So things like credit scoring or insurance scores could not be used for underwriting premiums or pricing for auto insurance. The bill also called for an immediate 20% reduction retroactively to January 2016 for all auto insurance rates, and another 20% premium reduction for those who meet the criteria for safe driving discounts. Now, Commissioner Rothman and the administration believes that the current system is unfair and discriminates against African Americans. This was part of the governor's diversity issues, so this was brought forth with that in mind. The legislature did not agree and did not, they heard the bill, but they did not enact it. It didn't pass out of committee. So that's floating around. My suspicion is that the commissioner will look at this issue again next year. Also failing to pass was an attempt by the Insurance Federation of Minnesota to collect individual data on auto insurance claims in order for their efforts to get at insurance fraud. The Senate had set up a task force on no-fault auto insurance, And that task force has looked at a variety of things for a couple of years and made several recommendations. One of the issues that they wanted to get at was fraud. And in order to get at fraud, you needed more than just generic data. You needed individual claims data in order to trend and see where the insurance fraud was happening and what could be done about it. Unfortunately, the proposal to collect that data and to continue the Senate's task force was killed in the Senate Judiciary Committee, and so that task force and their efforts are no longer there, and that in itself is a very significant blow to no-fault reform efforts at the legislature. Another piece of legislation that did not pass was a proposal for state-sponsored and administered retirement plans. This actually came to the legislature as a result of legislation passed last year directing the Department of Management and Budget to do a feasibility study on the efficacy of these state administered plans. The recommendation came back from the feasibility study in March, and it proposed a state-administered mandatory participation IRA for state small employers who do not offer a retirement plan. So the employer would be required to offer this state-sponsored plan. The individual employee would be able to opt in or opt out of that plan. That proposal was obviously opposed by the insurance industry as well as some of the financial services groups, and was not enacted. It was heard. There were hearings on it in terms of its context, but it was obviously pricey and not ready for prime time. Again, it may surface again in the near future. The Alliance of Auto Service Providers, those are the people that, the repair shops, got together and introduced legislation to try and alter insurance company referrals to preferred auto repair shops. They tried to put in law provisions that would require consideration by auto insurers of the repair shop's convenience, its location, its quality and workmanship, technical training, customer service, and a variety of criteria that would be required to be used. And in fact, insurers not using that criteria could be subject to civil actions. This is a very, very strong proposal by the auto repair industry to try and get at the issue of preferred providers, preferred repair shops, and it's a very controversial issue. It was not enacted, but I am sure that the repair shops will be coming back again for legislative relief in the near future. Lastly, we followed the debate on MIIAB, our state's health insurance exchange. House Republicans contend that the state's insurance exchange is broken and should be replaced. It's not met in its enrollment goals. It can't continue without additional state financing. So they have proposed getting rid of MIIAB in favor of the federal exchange, which is used by the majority of states. They also would recommend to allow people to choose. Right now, MIIAB directs you to a health program based on your income. There is no choice involved. If you qualify for medical assistance, you get that. If you qualify for Minnesota Care, you would get that. If you qualify for private health insurance with subsidies, you would get that. No opportunity to choose. The Republicans proposed allowing people to choose those options, and they also directed the Department of Commerce and the Department of Human Services to seek a federal waiver to allow for subsidies, public subsidies, to be offered to products sold outside of the insurance exchange. As you know, only products sold within the exchange receive the public subsidies. The Senate Democrats, on the other hand, continue to proclaim that MIIAB has its failings, but it is getting better and it's insuring more and more people. The Senate advocated increased state funding for MIIAB. They also proposed increasing the eligibility for Minnesota Care from 200% of federal poverty to 275% of federal poverty, and also to continue the state's provider tax to fund these initiatives. The provider tax is scheduled to sunset in 2019. Both of these proposals got some initial attention, but they were like trains that passed in the night. Neither side actually debated the other side's positions. So nothing happened as it relates to MIIAB, so things will stay the same. Now the moment you've all been waiting for, legislation that was actually enacted into law this year. Probably the most noteworthy issue on the property casualty side is the enactment of a definition of autocycles. Autocycles are classified as a type of motorcycle. They have 3 wheels, but instead of a motorcycle, they have car-like seating and not a saddle. They have cabin space with floorboards instead of footrests. This proposal is an initiative of Plymouth-based Polaris Industries, which makes a slingshot, which is an autocycle. The law would allow an operator to drive an autocycle with a driver's license and no need for a motorcycle endorsement. There really was no discussion about the required insurance coverages for autocycles. That would be left up to the marketplace. That law has taken effect, and perhaps in the near future someone with an autocycle will contact you for coverage. Another issue that was passed into law was presented to the legislature by the life insurance industry, and it's called principle-based reserving, or PBR. This is a NAIC model that updates the way to reserve for life insurance products. The old standard model that they used was quite dated. It was very formulaic and didn't have any opportunities to respond to the nuances of the marketplace. This PBR gives insurance companies greater latitude in how they reserve. It is an NAIC model, however, it was opposed by Commissioner Rothman, who testified against the proposal at every committee for which this bill went through, which was at least 8 committees that I'm aware of. Even though the commissioner was opposed to it, eventually the legislature worked on a compromise which enabled the commissioner to say he no longer opposed the bill by the addition of some $400,000 to hire 2 actuaries to work with the PBR issue. And that law was just recently signed into law by the governor and is effective immediately. So that was the 2016 legislative session. Again, it'll probably be remembered more for what didn't pass and then the 2 pieces that I mentioned that did. And I hope you enjoyed this presentation, and maybe we'll get more done next year. Thank you. Good day.
We would like to thank our 2016 Power and Partners for their continued support of the Minnesota Independent Insurance Agents and Brokers. Starting with our Diamond level partners. AAA Insurance, expect something more. Arlington Row Insurance, serving independent agents since 1964. Austin Mutual Insurance Company, rebuilding lives and restoring dreams. Auto Owners Insurance, the no problem people. EMC Insurance, count on EMC. Foremost Insurance Group, you can count on us. Grinnell Mutual Reinsurance, a policy of working together. Nationwide is on your side. North Star Mutual Insurance, a personable company keeping you on course. Progressive Insurance, think easier, think progressive. Secura Insurance Companies, write your own success story. West Bend Mutual Insurance, the silver lining company. And Western National Insurance, the relationship company. Secondly, our platinum level partners. Burns & Wilcox, Integrity, Premco, QBE, QBE-NAU, Risk Administration Services, SFM, and Swiss Re, our gold level partners. And last but not least, our silver level partners.